If I asked you who the biggest buyer of stocks has been since 2009, would you be able to tell me? Well, that buyer is buying $1 trillion in 2024 and $1 trillion in 2025. What is the impact here? We are going to discuss that today. You came here for the truth, so let me unveil that for you. In today's video, we're going to look at number one, the biggest buyer of stocks and what they're planning on doing this year and next year. And at the same time, we have institutional clients selling, and this has been something that could potentially balance each other out or cause a cascade of problems. Let's begin with this. Stock buybacks to surpass $1 trillion by 2025, according to Goldman Sachs. This is important to note because the stock buybacks, imagine this, companies buying their own shares has been the number one buyer of stocks since 2009. They do this, of course, to send their stock higher. If they buy back shares, they could push the price up. Who benefits the most from this? Well, Warren Buffett will tell you that the shareholder benefits tremendously as a result. But it's true that the insiders are the ones that get to reap the rewards of this more than anything else. And of course, that's what this is really all about. You can see here that they project $925 billion in share buybacks from S&P 500 companies throughout 2024. That figure is poised to surpass the $1 trillion mark in 2025. Look, we've been here before. We've seen a large number of share buybacks going on over the last several years. It's nothing new that these companies are buying a lot of stock. All right. Now, of course, you've got the Magnificent Seven that they talk about that are aiming, that have actually said, we want to make sure that we buy this amount. They basically say, okay, we're going to buy $50 billion worth. We're going to buy $100 billion worth. They list that all out and they make that known. And as a result of this, it is predictable where the stock will end up as a result, unless there are other factors that go on. In the event that the markets are going to move down considerably, let's say it's a financial crisis, stocks are selling off, they will not necessarily do that. But at this time, they're buying more and more and more. And as this happens, we look at the insider buying and selling. And what do? Well, they are able to cash out as the stock hits certain levels. And that happens from, we see it, all over, but the director level and higher. Okay, we can get that information from the Form 4 that comes out. We see that. And it's all public. And we know that this is the case. So they are buying mass quantities of their own stocks, and that pushes up the price. There's no question about that. However, if everybody else starts to sell, well, then we have a problem. And actually, some have started to get rid of some of those shares as we have moved into the bubble territory for so many. We continue to see institutional clients sell pockets of crowded tech. This is just looking at Magnificent Seven. Show you they're rotating into cyclicals, mostly concentrated in industrials and REITs, trickling into finance. It's a very healthy signal that demand is broadening. This is Goldman Sachs. All right. And if you've been on this channel for a while, or you're a part of my Finance Friday group, the live sessions that we have, what have I said? It's that the valuations of these high flyers, the AI stocks, all that trendy stuff had gone way, way farther than it should. Now, there are a few things that could happen. We could see them kind of level off at this point. It could go bubble and just go straight up into the stratosphere, and who knows what happens when it gets up there. Or we could see other stocks that start to come up in line with those other high flyers. That would be a positive thing. The alternative here is that we get a major correction, or, correction, let's say 10%, but not surpassing 20%. The chances of a 20% correction in the broad markets, 20% into a bear market, right now at this time is very, very low. I have said that over and over again. So what I want to make clear here is that the broadening, so we're getting breadth. The word you need to look for is breadth. And that, if that's true, if this is the case over the next several weeks, if the breadth improves, that is a sign of a healthy stock market. If it goes the other way and simply, the Nvidias and the, all these high flying stocks simply just get more and more attention over time, very unhealthy. And that does, have some problems over the next little while, historically anyway. Bitcoin reminded investors that sentiment can change on a dime after rising 7.2% from March 9th to 73,000 on March 13th. Okay, but then it fell 9% in less than 3 days to 66,000 and change, but still up 57% for the year. This is an example of what I always talk about the Finance Friday group, saying how Bitcoin is a very good example of a leading indicator. When I see what happens with Bitcoin, usually you have like the tech sector, you look at NASDAQ generally, and then the stock market as, after that. That's the way it goes. It is the lead because that's where risk moves first, I find. When we were down at 16,000, when we were down at that 20,000 range for Bitcoin, nobody wanted to touch it. There was nothing but bad articles being written about it. And once I saw that start to move up to, let's say, that 20, and then it'll go into 30,000, I knew that the risk appetite for people was starting to improve. That was a sign that even though interest rates are high, the risk appetite is there. I am not saying that Bitcoin is bad in any way. I'm not talking about that. Okay, so get it straight. Okay, what I'm saying is how it is associated with risk. Looking at the Magnificent Seven, you could see that, just comparing it, Nvidia is that one at the top, by the way, going wild and crazy. But you could see that it's been very different, all right, depending on which of these stocks you're looking at. So this is normalized as of December 31st to see how it has performed this year at this time, at least so far. And there has been some clear winners like Nvidia going absolutely crazy, but some of them have not performed as well, okay? At least when we compare these. So just understanding that there has been, just saying Magnificent Seven, that over the last couple of months, that has really changed, okay? I guess they have to change the name. First, it was the FANG stocks, and remember all that? I mean, it's going crazy now. So Magnificent Seven, we'll see what they come up with next. Tech stocks, let out of the rally, ease fears a bubble is building. Money-losing tech companies that surged in 2020 fall this year. Shows investor focus on profits and shift from previous booms. That is actually a very good thing. All right? We want to see that. We don't want to see these companies that have no earnings, no future potential. There's nothing about them. And it's just like, hey, let's all jump in. The Blockbuster, remember that company, Blockbuster? Yeah. Okay, you might have gotten your VHS and your DVDs from there. That company has a stock which is associated with the whole bankruptcy of that company. That stock is still there. It's basically nothing. That was going crazy during the 2020 boom. Okay, that tells us that there was crazy insanity, NFTs, pictures of monkeys and all that stuff. That's not normal. Let's be clear. That's not normal. That's what happened. Luckily, we're not seeing as much of that now. That's a good sign. Let's celebrate that at least, but understand that where there is a bubble, you got to watch out, danger down below, because it doesn't matter how good the company is doing. There are going to be big investors that say, I'm good. I made my money. I made 5x on my money. I'm out. And they're going to sell, or at least sell a large percentage of their position, even if they think there's still more upside potential. You can't think like a retail investor. You got to think like somebody with billions of dollars moving it in and out. TSMC bulls ignore Buffett's warning for bet on the coming AI age. The chipmaker diversified operation bases to alleviate the risk. TSMC, check this out, makes 90% advanced semiconductors used for AI processors. They are instrumental in what's going on with AI. And so this is the one company that we've got to, keep an eye on for many different reasons. And they're involved in, all of the back and forth between China and the US. Like there's really there. And that's what Buffett was warning about, saying, hey, they are right in the middle of this. There's a big concern flashing red sirens, everything going off. So they sold off their position at Berkshire. Others are saying, I'm going to buy in because AI is the latest and the greatest. All right. And this is ultimately the most important factor beyond anything else. It is what the central banks are doing. And at this time, they are doing quantitative tightening. But the expectation here has always been that they will never normalize their balance sheets. They will never get it back to where it was before, even close. At the same time, the debt and the deficits produced by government will never get to anywhere near normal. And so the expectation is that we are still going to be always in a state of easing, whether it's a lot of easing or whether it's just somewhat easy. They can never get to a tight environment. They were there for a couple months, but generally broad financial conditions have eased significantly since then. And just a little bit of humor to finish off today's video. Well, I guess it's not really that funny. Hidden cameras capture bank employees misleading customers, pushing products that help sales targets. They don't care. So understand, when we look at all of this information that you see, everything, some Goldman Sachs person, some YouTuber, whatever, they all have an agenda and they're all pushing it on you. They have a reason to say certain things. They're selling you something. They're trying to push something on you. Just be aware of that, okay? I want to do my best to help everybody I can. I've been doing this for 13 years. It doesn't matter what the views are. The views are like what I was getting back in like 2014. I'm still making videos. You see that. I want you to get the best possible information that you can. I have that available to you. It's called Compass. Compass is free. There is no paywall. There is no email. There's nothing. You go to Compass, you get the financial education you need. It's so simple. I broke it up into these super short videos, 20 minutes long, and you got the nice base of financial information. Nobody else is doing this. There's not like an upsell where you go in there and there's like, yeah, it's actually just nothing and it upsells you into some garbage. No. Go to themoneygps.com, get Compass. Maybe you already know. So send it to your friends, your family. There are no links to my YouTube channel, no nothing. I did it on purpose. So you can just say like, hey, you want some financial education? Check this out. Nothing about the Federal Reserve, nothing, none of that. Okay? I know you might know it, but there are other people out there who don't. Compass is the thing that's going to help them out. Themoneygps.com, and you can go to the Compass link right there. This is what you need to know. I hope that you will get that if you don't already have it. Totally free, right on the website. I appreciate that. Hit that thumbs up if you appreciate my information here. And of course, as always, make sure that you go to Find the Money GPS tomorrow because it might not come up in your feed. I want to see you back here. Take care.